Hey, I'm Marco. Today, I want to show you something structurally different in the crypto lending space, a platform called 8lens that uses blockchain as infrastructure, not as an investment thesis. No speculation on token prices, just traditional business lending on more efficient rails. Let's walk through it. When most people hear the phrase crypto lending, they think of what happened in 2022. Celsius, BlockFi, Voyager, platforms that promised unsustainable yields by relending customer deposits into increasingly risky positions until everything unwound at once. That is a fair and accurate read of what most crypto lending actually was. I'm not going to pretend otherwise. What I want to show you today is something structurally different. A platform called 8lens that uses blockchain technology as infrastructure, not as an investment thesis. No speculation on token prices, no rehypothecation into DeFi protocols, just traditional business lending operating on more efficient rails. Quick check on my Maclear portfolio before we dive in. Everything's running exactly as expected. Consistent returns, no flags on any active positions. Maclear is my regulated European foundation and it's working exactly as intended. But Maclear's Swiss regulatory framework keeps their focus on European projects. What if you want access to higher yield opportunities in markets outside Europe? That's the gap 8lens fills. And the fact that it was built by the exact same team as Maclear tells you a lot about how carefully it's been structured. Let me clear up the most common misconception immediately. In our 8lens is not a crypto speculation platform. You are not betting on the price of Bitcoin or Ethereum. Your returns do not move with the crypto markets in any way. 8lens is traditional crowdlending, the same fundamental structure as Maclear. Businesses apply for loans, the platform underwrites them, investors fund them, borrowers repay with interest. The only difference is the payment infrastructure. Instead of traditional bank transfers, 8lens uses USDC as its payment instrument. USDC is a stablecoin, a digital token redeemable one-to-one for US dollars, backed by cash and US Treasury securities held at regulated financial institutions. It does not fluctuate in value. 1 USDC equals $1 today, tomorrow, and when your loan matures. Your exposure is to the credit quality of the borrower, not to any cryptocurrency price movement. Why use USDC at all? Two reasons, and both genuinely matter. First, smart contracts. The loan terms, repayment schedule, and collateral arrangements are encoded into self-executing contracts on the Ethereum blockchain. There's no operations team manually processing transfers, no correspondent bank delays, no cross-border wire fees eating into returns. The cost of running a loan from funding to full repayment drops dramatically, and that efficiency flows through to investors as improved returns. Second, geography. USDC moves across borders instantly without the friction that makes traditional cross-border lending expensive and administratively heavy. This unlocks projects in West Africa and the Middle East, markets where there's a genuine shortage of efficiently priced business capital and strong underlying demand from credit-worthy borrowers. One thing I want to flag that often gets overlooked. Before you commit a single dollar on 8lens, every loan discloses the borrower's details, the collateral securing the loan, the repayment term, and the interest rate. This is not a black box. You know exactly what you're funding. And when repayment comes in, it doesn't get routed to a manual process. The smart contract executes automatically. Principal and interest are distributed to every investor in proportion to their position. Within the same block, the borrower's payment lands. No human in the loop, no processing delays. The extra yield compared to purely European platforms isn't from speculation. It comes from structural efficiency and geographic access to underserved markets. The feature that genuinely distinguishes 8lens from every traditional peer-to-peer platform is blockchain transparency. I want to be specific about what that means in practice. Not as a concept, but as something you can physically check yourself. On a traditional peer-to-peer lending platform, you are trusting the platform's internal database. When a repayment comes in, someone records it in the system. When you look at your dashboard and see that a loan is performing, you're seeing numbers the platform has chosen to display to you. That's not necessarily dishonest, but the verification mechanism is entirely internal. There's no independent way to confirm what you're seeing is accurate. On 8lens, every transaction goes through a smart contract on the Ethereum blockchain. Every repayment is publicly recorded on a permanent, immutable ledger that anyone can query at any time. I can take the smart contract address from any 8lens project, paste it into Etherscan, and see the exact block number, timestamp, and amount of every transaction that has ever touched that contract. No interpretation required, no press release, no waiting for a quarterly report. The blockchain records what happened, and it cannot be altered retroactively by anyone. This is an extraordinarily powerful investor protection mechanism, and it's underappreciated precisely because most people assume that anything blockchain related is either too technical to understand or inherently speculative. When the borrower makes their monthly USDC repayment, that transfer appears on Etherscan within seconds. You can verify it yourself without asking anyone's permission, without trusting that the platform is showing you an accurate number, and it doesn't stop at verification. When the repayment lands in the smart contract, distribution happens automatically. Interest and principal are split proportionally across every investor in the same transaction. There's no operations team deciding when to release funds. The contract executes the moment the payment arrives. For investors who've watched platforms manipulate their dashboards during times of stress, the value of that independent verification and automatic execution is enormous. Getting started on 8lens is more accessible than the word blockchain makes it sound. Let me walk you through the actual steps because the real friction is much lower than most people expect. The first thing you need is a Web3 wallet. Think of this as a digital account that you control directly. No institution holds the keys for you. MetaMask is the most widely used option and the easiest starting point. You install it as a browser extension, generate a wallet, write down your seed phrase somewhere secure, and you're set. This takes about 5 minutes if you've never done it before. Keep your seed phrase offline, written on paper, somewhere safe. Do not store it in email or cloud storage. That's the most important thing I can tell you about wallet security. The second step is KYC verification through SumSub. This is identity verification. Government ID, a selfie, possibly proof of address. The reason I specifically mention this is that 8lens uses the exact same SumSub provider as Maclear. If you've already verified your identity on Maclear, you may be able to complete this step significantly faster or skip it entirely depending on your verification status. The third step is funding your wallet with USDC. You can buy USDC directly through the 8lens platform using a card or bank transfer. You can purchase it on a centralized exchange like Coinbase or Kraken and transfer it to your MetaMask wallet. Or if you already hold USDC, just connect and go. The fourth step is the actual investing. Browsing active loan projects and funding the ones you want. You can filter by region, borrower type, term length, and interest rate. Each project shows the full loan disclosure upfront, borrower profile, collateral details, repayment schedule. If you don't want to pick manually, an auto-invest feature handles allocation for you based on criteria you set. The interface is intuitive, much closer to Maclear than to anything crypto native. Once you've done the setup once, the experience of browsing and funding loans is straightforward. Let me give you my honest thinking on how to use these two platforms together because I think the combination is more interesting than either platform individually. Maclear gives you a regulated European foundation, Swiss regulated through FINMA, a provision fund that covers payment gaps before they become defaults, Maclear itself acting as collateral agent in recovery scenarios, and a stages financing model that limits your exposure at any given point in a loan's lifecycle. Strong structural protections, target returns, in the 12 to 15% range, exposure to profitable Eastern European businesses. That's your core position. The part of the allocation that's built to be durable. 8lens gives you access to a different market segment and a different set of structural advantages: blockchain verification, smart contract execution, the efficiency gains that come with both, higher yield potential from geographic reach into markets that are underserved by traditional capital, same underlying team, same credit discipline applied to a different instrument. The way I think about sizing: get comfortable with Maclear first, understand the mechanics, diversify across several loans, see how the platform handles the full repayment cycle. Then layer in 8lens as your growth allocation, starting relatively small, learning how to verify transactions on Etherscan yourself, getting comfortable with the USDC workflow. One important caveat: 8lens involves blockchain infrastructure, which carries its own category of operational risks beyond standard credit risk: smart contract vulnerabilities, wallet security, USDC back-in stability. These risks are real and manageable, but they deserve to be understood before you allocate a significant amount. Both platforms are linked in the description. Maclear at marcusschwarz.com/Maclear, 8lens at marcusschwarz.com/8lens. Subscribe if you found this useful. I cover European investing platforms and portfolio construction regularly. See you in the next one.